When you go to a dealership, they may ask you if you want certain products and things once you make a decision on a vehicle. And one of those products that they sell in the back end in the business office when they're doing the financing and signing papers is gap insurance. Now, gap insurance, if you're not familiar, GAP, now some companies they use that as an acronym, like say guaranteed asset protection or something like that. But basically it covers the gap in which the money that you still owe on the vehicle. So like say, if you buy a car, you owe $20,000 on it, right? You're making payments, but the initial payments that you're making, most of that in the beginning goes towards interest because your balance is really high. So let's say you pay it down to say $15,000, and then you get in an accident or something happens to the vehicle, a tree falls on it, and it completely totals the car. Well, you owe $15,000 on it, but the actual value of it has dropped below $15,000 during that time period in which you're adding miles, you're adding wear and tear, and also age. So at that point, say the vehicle is worth 13, because there's this time in which it's in the beginning you owe more than what it's worth for a while, and then it surpasses that after a certain point, and then typically it depends on how fast the vehicle depreciates and how the condition and all that stuff. But there's always this point, there's always this time, a pretty good amount of time in which you owe more than what it's worth. So if you were to total it, well, the insurance company is going to pay you or pay off what's the vehicle's worth. Okay, so if you owe more than what it's worth, then that means that you have to pay it. So like say if you have to pay $3,000 or $4,000 if the vehicle gets totaled, if a tree falls on it, it's completely not your fault, but then you're stuck with this massive bill, and then it really makes it to where you can't even buy another car yet because you haven't finished out and satisfied the previous loan. So you're kind of stuck. So gap insurance pays for that gap. If the event happens in which the vehicle is totaled and you owe more than what it's worth, then it'll pay that gap, that difference in what it's worth and what you owe. And that way it frees you up to buy another vehicle. It clears your name. You don't have to worry about it. Now, that is an additional charge. It could be anywhere from $200 or $300 up to $500 or $600, depending on who you buy it from. But that is an option that you'll find in the dealership, or pretty much any company that offers financing for vehicles. They will also offer you gap insurance. Now, if you put such a large down payment on a vehicle in which you're never going to experience a time in which the car is worth more than what you owe on it, worth less than what you owe on it, then it makes sense. You may not need gap insurance. You want to do the calculation. Typically, if you're if you're buying a $30,000 vehicle and you're putting $10,000 or $12,000 down, most likely you will not need that insurance. So it's something you want to consider. I would definitely consider getting it if you're not putting a whole lot of money down, and you're going to have a loan that's going to be 5 or 6 years or whatever the case may be. At least if it's 4 or 5 years, definitely you want to go ahead and consider that. So that's what gap insurance. It just pays for the difference between what you owe and what the vehicle's worth, only in the event the vehicle gets totaled.